Hello.
Hey, Mindy.
All right. So we're doing a quick test here, and I think we're live.
We're live.
All right. All right. So we'll go ahead and get started then. Well, thank you so much to everyone who's tuning in. For those of you who are tuning in after the fact or seeing this after, it's March 16th, the afternoon, and we're here because there was a pretty big announcement made by the feds, or as everyone calls it, the feds today. So we're diving into that a little bit. We've got with us here Chris Galley. Chris and his wife Julie are mortgage experts, would be an understatement. Chris has been in the industry for 24, almost 25 years. So he definitely has seen all the ups and downs of all things market and mortgages and home buying and everything. So, Chris, thank you so much for taking the time to educate us a little bit today.
Well, thanks, Mindy. It's my pleasure. I really enjoy this part of my job, so I'm excited.
Wonderful. Well, so let's just dive on in. What was announced today?
Well, the highly anticipated rate increase. So the Federal Reserve announced that they will be increasing the interest rate by 1/4%. They did this. They did this for one big reason. They want to address the rapidly increasing rate of inflation right now, and the meaning of it was to just slow down inflation, and they really had to do something.
So, can you explain to us, I guess in simple terms, who are the feds and what is this rate that everyone's talking about? Or when the media says the rates, what is that?
Great question, because a lot of people get confused and they think they're talking about mortgage rates, and that's not necessarily what they are talking about. So, the Federal Reserve is the central banking system of our country here, and it's a quasi-government organization. Their job is to regulate the financial industry. All right, manage the supply of money in the U.S., and it also controls the interest rates. The Federal Reserve also, Mindy, what they do is they set the regulation on banks themselves in terms of how much the banks have to have in reserves or what they need to have as cash on hand. Now, when the media typically talks about interest rates, they are talking about the federal funds target rate. This is a guideline on what the interest rate should be for banks to borrow from other banks. This has nothing to do, it is not an increase on mortgage rates at all. So we have to be clear on that. That is a common misconception. And the common question is this too: why would a bank have to borrow from other banks, right? Which is a great question. It's because their cash on hand that is required by the feds may be low. So they have to go out and borrow some to get it back up to par and have enough cash on hand.
So, Fed's increasing rates does not equal an increase in mortgage rates. That's the main
No,
point here.
not necessarily, no.
So, looking at this both as a large economic perspective and then on households, what can we expect to see from this?
So here's the effects, what we should expect for the results. In their goal in raising interest rates to slow down the economy, thus slowing down the inflation. What consumers may see, they may see higher rates on their credit cards, or if they're out shopping for a car, they may see some higher rates in their rates when they do purchase a car. It's definitely going to put a pinch on household budgets. The cost to borrow may become a little bit more expensive, and families, they're just not going to be able to purchase as much as they may have been in the past few years.
So, then what about for potential home buyers or someone who is thinking about, stepping into home ownership or maybe buying a new home? What can they expect?
Well, great, great question. Because if anything, this might help home shoppers, but it does not have any direct effect on mortgage interest rates. That's what I can tell you there. So the mortgage interest rates are mostly determined by the mortgage-backed securities, which is a whole different topic that we're not going to get in on this call, but we should get in on a call down the road and talk about that with everyone out here. But people should remember, especially people renting right now, that this change, along with inflation, is already making rents skyrocket. I hear of cases of rents going up 100% in some cases, especially in our Florida market, and it's going to keep going up with this. So renters should, what we're encouraging renters to do is take a look and see, maybe now is a good time to buy for them, to protect themselves, protect their budgets. And, by buying a home, it will lock in their mortgage payment, right? It will lock in the price they pay for where they live, right? And it prevents future increases. So other than the increase of property taxes and possibly homeowners insurance, their fixed payment will be good. Sorry about that. I got a little tickle in my throat.
Well, I mean, I don't know about everyone else, but I've heard some horror stories on rental increases.
Yeah.
I mean, everything from several $100s increase to, in some cases, going up by $1,000 or even more. And I mean, that's just scary. So, well, Chris, thank you so much for taking the time and clarifying that for all of us and giving us a little insight into what that means. So if people want to find out more information about mortgages, market updates, anything like that, what would you recommend for them?
Well, first off, we're honored to be your mortgage experts. I mean, we take a lot of pride and we like to work hard to make sure that we can give you the content and the information that you're looking for. So we encourage you to go visit us on our website at mortgagedreams.com. Follow up on Facebook and also our Instagram, because we're always putting updates on the economy and the housing market all the time, even almost on a daily basis. So if you want to stay connected with us and you want to have some good content and learn, and it's going to be valuable information, please first go to the website, again, mortgagedreams.com, and then follow us, follow me, find me on Facebook. I'm here and I friend everybody that I can. So we look forward to working with you guys and answering any questions anytime.
Perfect. And I would like to second that. If anyone has any topics or anything that confuses them that they'd like us to do a webinar on, or a reaction or address, leave them in the comments and we'd be happy to get to those, because Chris, I know you've got like so much info up there in your brain on this, and I've seen it. You love sharing and teaching other people about this stuff as well. So anyways, thank you so much for taking the time today. Everyone else, thank you so much for tuning in, and we look forward to hearing from everyone and talking and continuing this conversation.
Yes, thanks guys. Have a great St. Patrick's Day.
Have
tomorrow.
a great day. Bye-bye.
All right, bye now.